Hello, everybody. Welcome back again to another episode of Pitch, the webinar for preparing and presenting business cases. Our topic today is customer-based growth and what to consider in terms of market access and growth. My name is Thomas Wittig, and I will be leading through this webinar today. The Pitch webinar is, let's say, the little brother or sister of the online course or the workshop that we conduct, that I'm leading with companies and entrepreneurs as well. And I will explain that in a second. But our topic today is basically, again, three things. So we take this three-step again. First, I'll give some thoughts about customer-based growth and how to think about it. And then talk about some growth strategies and tactics, and then opening up for a short Q&A. As always, you can find more information on our YouTube channel, WITTIGONIA, or in the online academy, in the briefing centers and online courses. So go to academy.wittigonia.com. The replay will be made available on the YouTube channel pretty much very soon after the webinar is finished. And then you can check back in again. And for those who would like to dive deeper into the topics, again, I would recommend to check out the courses and briefing centers in our online academy. There you find plenty of deeper let's say briefings, step-by-step guides, videos, tools, templates, checklists, etc., etc. This course is also available on the online academy. So check out the pitch version. You see there are two courses. One is in an English version and the other one is in German language for the German-speaking community. For the questions, there will be a short Q&A right after the webinar here, or within the webinar, right after the content. And also check out the Facebook pages. For example, Shape Growth is usually a place where you can ask questions in between, and then be happy to expand and share the questions with the others. So again, my name is Thomas Wittig. For those who just joined the webinar, I'm the founder and CEO of WITTIGONIA. We're working with companies on innovation, growth, and transformation topics. There are three topics today. First, I will walk you through some scenarios, some simulation scenarios that I have prepared. And then I will speak about some common growth strategies and areas you might want to consider for preparing and pitching your business case. Before we get started, please take a moment and share the webinar in your communities. I think there are buttons in your webinar interface, or simply tweet and post this on your networks. The more people we have in the network and asking questions, the more everybody will learn from it. So again, help to spread the word. Again, for those who came in late, there's a short, let's say, online course or a deep online course in the online academy, which is continuously expanding in terms of the content and tools. So feel free to check it out. Accelerating growth. Why is that an important topic? Well, it's kind of the linchpin of the whole plan. Of course, in one of the previous webinars, I talked about the financial plan and how to prepare for it and what to consider. And just to revisit the typical outline of a business case or a pitch deck in much detail, there's certainly a section about the financial plan. But what is the financial plan without thinking about the customer base? Because there we will get our product adoption and, of course, the revenues coming from it, but also cost elements. So we have to think about that. And of course, the customer-based growth is part of the growth cycle, which I explained also in a previous session. So we have of course, a big feedback loop, which goes from selling to customers, collecting revenues, gaining some profit, and then spending that again on marketing or staff to drive product development or enhance our sales efforts. So the more customers we win, the more we can monetize and create profitable income from the customer base, the better off we are, of course. But also, if things don't go so well, and in any case, we have to allocate and pay our people. So that is the balancing feedback loop. So we have to pay to that attention as well. The just to recap, if you haven't seen the previous episodes, I was talking about the typical failure modes for startup projects and also for innovation projects in general in the corporate sector. It's usually not about technology. It's not about really the funding or executive support. It's somewhere in between the team and the product adoption. So that should really raise our eyebrows and make us think in how we can think about how to fuel the growth cycle and make sure that we address the growing pains of product adoption. Because if we can eliminate the problems in this area, we have a much higher likelihood of success, and we can move forward. We can win the support from the investors or the other stakeholders that we're working with. So the credibility of the adoption story that you are telling is really of the essence. It's key to be really solid on forecasting, validating the assumptions, creating evidence, growth, and retention. And my favorite topic in that, and that's something I have learned over the years from working in let's say high growth companies and also managing large installed base of customers and installed base of devices. It's really important to understand the dynamics that are embedded and inherent in a growing customer base. So we need to understand the drivers of adoption and retention. Now, I want to start today this particular talk about a very typical quiz I give typically at the start or at the beginning of the workshop when I'm working with teams. And it's pretty amazing that the results from this estimation exercise are so all over the place. But it illustrates that it's difficult for us to estimate how viral adoption, for example, and accelerating growth is really coming about, and how we can influence it. So in this typical scenario, we're talking about a total available market of 10 million customers. For the sake of the discussion now, it doesn't matter if it's a B2C or B2B market. And we have already 10,000 customers in our installed base, so good job. We can build on that. And the customers are joining the customer base purely through word of mouth. So we're not talking about any, let's say, other major activities here. And so each customer has a contact to 10 potential other customers per month. And the likelihood of another customer joining is 3%. But we also have to consider a certain churn rate, which we factor in here with 2%. And typically what I ask then in the workshop is first to draw out what we believe the shape of this growth curve might look like. And that can have also very different forms. I should actually make some pictures in one of the next live sessions so that you can see how widespread the beliefs are. And then I asked them if this scenario would create a peak in sales. In other words, that that the sales volume is hitting a maximum and then declining, and what would be the timing for that maximum, and what would be the total amount of maximum sales that we can accomplish at that point in time. And we get all kinds of questions. And I would like to walk you through the strategic architecture behind this thought process before I'm going to show you the results. What we are talking about here is that we have an existing customer base, so that would be this bucket here. And through the adoption process, which means like people are buying the product or we sell it to them, they become part of our customer base. And eventually some portion of the customer base, month by month, is leaving the customer base for whatever reason. They might have different alternatives, or we have a quality problem, whatever it is. So that is the base structure. And of course, in some, let's say, service-oriented business or software as a service-oriented business, we have also contracts expiring. So the customers become potential customers again, and we have to renew them. It's called the renewal cycle. Yeah. And the point that I would like to explain in more detail is the architecture of accelerating growth. And the reason for that is many pitches come forward with the famous S-shaped growth curve, but I have made the observation that few people really understand how the growth curve in an S-shaped form is really coming about. So I'll explain that here in a minute. And what I've done here is a system dynamics model, a feedback loop diagram, which is building on the very well-known Bars diffusion model. And it explains how the customers, potential customers, become customers. And that is, first of all, through direct adoption, through promotion, or through the customer base, which means through the word of mouth feedback loop. And fairly simple. So the more customers we have in the customer base, and the more come in contact with the potential customers, and they have a certain contact rate and a likelihood of adoption, so they would become customers of our customer base. And this is a compounding feedback loop. So it's like a snowball effect. The more customers we have in here, the more contacts we can make with potential customers, and so on. Right? It's a simplification of, let's say, a conversion flow, if you want, but it illustrates the point very well. And the churn, typically, we know that a fraction of the customers are leaving. So let's say 1, 5, or 10% per month. And that is creating an outflow of customers from our customer base. So they become lost customers at the end of the day. You could, of course, make the case that, yeah, lost customers we can target again, so they become potential customers, but we haven't modeled that here in this granularity. Now, behind this are equations. So the beauty about this kind of work is that we can run simulations. And so let's take a look at what the customer base would look like under these parameters and the scenario settings. And this is what happens according to the parameters and the simulation model. So we have an let's say a good increase here, and then suddenly an acceleration is kicking in until about here, where we have this certain inflection point, and there the growth is flattening out. And at some point in time, we have reached a peak, and more customers are leaving because we're running out of potential customers, and churn is biting away. Now, in terms of the system dynamics in this whole customer base, this area here is where we have a positive feedback loop. So the more customers we have, the more we win. But then after this inflection point, the balancing feedback loop is kicking in. And that is pretty much here when we are running out of potential customers and we cannot add more customers to the customer base. That's when this flattening out kicks in. And after this peak, we see the constant decline because we have exhausted our pool of customers, and we are gradually losing them because we have a certain churn rate. And point number one to note here is that if you are presenting a business case, you may want to articulate what your expectation is, your assumptions about the churn rate. And I can tell from seeing many business cases and many pitch decks that most teams usually present how the customer base is growing and how many customers they want to win, but not really articulating well or not at all how the decline is actually coming about in terms of the churn. So we have to factor that in, of course, in order to have a credible case. Now, if we take a look at the adoption rate, and again, let me flip back here again, the adoption rate is the flow. So these two are the bathtubs, or the reservoirs, if you want, of potential or existing customers. And between them, we have a flow rate of adoption taking place. Now, if we take a look at that over the time, that's really the beauty about thinking it in terms of a system, because we are considering the change over time. And there you see, indeed, we have a peak of the sales volume that occurs somewhere here around after the month 24, and it's in the order of magnitude of almost 700K customers per month. And after that, we see a fairly sharp decline. And it's interesting to note that this period from about here to here is fairly short. So it usually accounts for a lot of surprises, not only in startups, but especially in the corporate world, where suddenly the sales team experiences difficulties to win customers, and the rate of winning customers per month is going down. And then, of course, the panic kicks in, because people realize, okay, we have to do something about it. What are we going to do? Entering a new market, product update, but you would have to start with your product update actually fairly early in order to account for this decline. Otherwise, you see a lot of secondary effects or ripple effects throughout the organization. And also with potential customers, so this is the remaining market. You see how quickly this is coming down. Pretty much it's mirroring the S-curve from a different perspective. So by the time that we are increasing customers, of course, we are losing our potential customers. And at some point in time, we have not much of a remaining market anymore. So the only thing that we can do is retaining our customers or finding a new way of selling to them. And then also interesting, if you account for all the lost customers that would happen in this scenario, it's an astonishing number. So you lose actually half of the installed base over time. And at some point in time, you only end up with half the installed base that you actually have won. Now, we did this exercise with many participants in workshops, but also did a field study through our Insights effort. And what we found was very interesting. And I did this because I really wanted to understand, why are people coming with these hockey stick forecasts, right? I actually wrote a blog article about it. You can see on our website. It's called Hockey Stick Confessions. And the insight was that people tend to overestimate in the short term by a significant factor. And also they really have difficulties in understanding the flow rates, meaning the sales volume. So the green bars here indicate the simulation results from this case, which would normally happen under these conditions. And then you see the estimates of the peak are way too late and much higher than actually could happen in the real world. So that explains probably not only the difficulties that people have with the estimates and come forward with hockey stick confessions, but it also explains why many projects often fail or have a surprise moment when people realize, oh, we have not much of remaining market to go, so we need to accelerate the development and innovation efforts. And so if we take a different scenario, and I've just taken here a scenario where we're not having 10,000 adopters, but let's say it's more like B2B or an early startup where we just have our first 10 adopters and everything else is the same. And you can see already how long it takes for this business scenario to really take off. Eventually, at some point it will, but it's much delayed, of course. And then the question always would be, how can we advance these curves? So how can we make sure that we are accelerating growth? And if time permits on this webinar, I go into the detail on what we could do and how the shape of these growth curves actually would look like, just to get into the mindset and into the groove of the changing dynamics in an installed base here, okay? But if we take this scenario apart and here in a 4-quadrant layout, you can see also, well, the good news is we have a lot of room here because our potential customers are available for a long period of time, which in the real market is, of course, not realistic, because if you have a great market and a great product, then soon the competitors would come in. And that's, by the way, one of the risk factors. If I move as slow as in this scenario and my competitor is moving like this, then I'm losing immediately market share. So my survival rate is, or chance of survival is very limited. But here again, we have these 4 charts again: potential customer base. So and then the adoption rate. Also, you see here that pretty much we also have a peak, but it happens much later. So it takes twice the amount of time than it would take in the base scenario. And of course, we also start losing customers. Now, if we would have a longer time frame here, we would lose the same amount of customers. Yeah. So the question is always, what can you do? And of course, looking at the the strategic architecture of such a problem, there are several levers that we can actually use here. One is, of course, to do a churn reduction, so to cut down the number of people that are leaving us through various efforts, for example, quality efforts, product upgrades, or other forms of engagement. Secondly, product capability is helping us to increase the adoption. It helps with the sales effort, but also it makes the product much more attractive. And so the probability that a customer would actually acquire or purchase the product is increased. And it would make the life of the sales people in the field much easier and much more joyful, of course. And the third area, of course, is working with higher quality contacts. That's where our influencer marketing activities, for example, are coming in, or our lead customers, or early adopters who are, let's say, if we have a software as a service solution or a new app, would be more inclined to check out a beta version or a pre-release version of the product, for example. And that is helping us to increase the adoption. And then, of course, we can also increase the sales effort, which means we can hire more people to make more contacts. And that would, of course, also help us to, as we say, prime the pump in the installed base and make sure that we move the curves forward. Now, before I go into the more complex scenario, let me switch here a little bit to our little laboratory. So I've prepared a little management flight simulator. So this is how I put this stock and flow chart together. And behind this is a simulation model that we can use. So there are equations behind these flows. So I can show you one here, for example, the expiration date or the churn, for example. That is the customer base times the number of customers leaving, or fraction of customers leaving. And the fraction of customers leaving would be 2%, as we said in our base scenario. Okay, so if we simulate this, then we would get our growth curves. And I'm contrasting here the previous base run to the new baseline scenario of this, let's say, more B2B oriented project that we have. Now, as I said, one of the first lines of defense is to work on churn, for example. So we need to ask what happens if we cut this in half, and let's say instead of 2%, we have 1% churn per month. And I call this simulation run reduced churn. Okay, right spelling here. And so what happens is our flow of customers leaving our installed base should be lower. And let's check that for a second. Let me do the run again. All right. And there we can see it. So this is a much lower churn rate here. So, and likewise, we should see that the customer base is improving. And yes, indeed, we are moving the curve up here. So we retain more customers, etc. But it's not nearly enough. So let's say a part of our strategy could be to have to make more contacts, for example. And let's say instead of 10, we make 13. So that would be 30% more, which is already a big jump. And additionally, we call this also more contacts. So we do the simulation run. And there we see that is moving already our curve significantly upwards here. So that could be one of our key strategies, of course. And it's important to see what the change over time is. Yeah, but we still have this period here where let's say nothing seems to happen. And so we have very little adoption, and that is a very sensitive period because our investors or project sponsors might get really nervous about this. And so maybe another tactic would be to work on our product proposition. And let's say we're able to move that from, let's say, increase the adoption from 3% to 5%, or think about this as the conversion ratio here, or click-through rates or adoption rates that we have. So we should give this simulation run a name and say we call it a sticky product, right? And so we have simulated that. If I just would take a look at this flow here, or what would happen in terms of product adoption, and then I see our sticky product simulation run, which is this dark line here, is indeed much more accentuated and is happening already much earlier than all the other runs. So that leads to a higher adoption rate altogether, and we should see the customer base actually growing. And indeed, we have a much higher adoption rate, and we hit the peak much earlier, and we capture market share much sooner and to a higher degree. So that could be a good strategy for us. Now, the question is, what could we do actually in order to make sure that there's sooner action and that we don't have this very sensitive period of time here for 12 or 18, 24 months where nothing seems to happen? And the answer to that is we have to get early adopters into our customer base. Yeah. And keep in mind that we have two scenarios here. So the original scenarios was with 10,000 customers. And here in this scenario, we have 10 customers. Now, if I would increase that, let's say we would have 100 product beta testers, and I call this early adopters in the simulation run, then we would see what is happening. And indeed, this is now this other dark color. It's a little bit hard to distinguish, but it's a brownish kind of color. Let me make that a little bit bigger window, so there we can see it much better. And here, indeed, we can see that, well, it's not taking 12 months, but let's say 9 months or something like that. We can actually zoom in into this a little bit more. Let's say I take the 12 month, I'm interested in that. And I do this thing again. And there I see for the first 12 months, so note the different time scale here, I can see how the install base is actually accelerating. So that would be a very good outcome, and it gives us a good starting point. Okay, so again, this is just a simplified example, and switching back again to our presentation mode here, I wanted to show you this slide here. This is much closer to reality, and I put this model together for a different class that I'm teaching on the KPIs for software as a service solutions. And here you can see a much more detailed flow, so which goes from potential customers to trial customers. They become paying customers, but there are also the dormant customers, which means that they have paid, but they're not using the product, which is usually a problem. And then we have expiring customers that we need to renew it so that they become active. If we don't renew them, they would be lost customers. And you see all these loss rates here, right? And you can imagine when we're simulating or working with these more let's say, detailed simulation models, we can get a better feeling of, why are we losing the customers? What happens if we stop the outflow of customers, for example, from the trial accounts, or what happens if we increase the trial time, etc. So if you find this kind of work interesting, I would really like to ask you to leave a comment in the under the videos on YouTube, or in the Shape Growth website, or on the Academy discussion groups, which are the private discussion groups we have in the online courses, and then we can expand on that in more detail. This particular model was developed for this course here, which is called a Deep Dive into SaaS, into the SaaS KPIs, and feel free to check it out. So I think it's very worthwhile looking into and really becoming solid in also the definitions of the KPIs of a software as a service solution. Okay, so now I want to spend maybe a few minutes and walk through quickly through some of the basic things that you should have in place. And I'll do this fairly swiftly. You can always rewind and look at this video later on. But the basics really that you want to have in place are the basic tools. So what do I need in terms of figuring out my growth strategy, also in terms of digital marketing strategy? Of course, you want to have your minimum viable product and hopefully your built-in analytics in your product, but also the tools that you can use, which are free of charge. And if your organization allows you to use this, I would be the first one to implement, for example, Google Analytics, the Facebook Pixel, Bing Pixels, and whatever. And there you can get much detailed information about the audience, the cohorts, the composition of your installed base, the conversion flow, etc. But also make sure that you are using tools for so-called A/B testing, which might be a topic for a future webinar or seminar which I'm offering. But look out for tools such as A/B testing in Google or Optimizely. And, they usually offer a basic free version, which you can check out. Very, very important to do that before you're spending money on growth, to do the testing first. So that saves you from a lot of headache. And then make sure you also have your core content in place, like blog, SlideShare, graphics, video, and you really understand the search engine optimization about it. Now, many projects and also startup projects are struggling with creating evidence. Now, what you can do, for example, if you don't have a product yet and you want to convince your stakeholders, you could, for example, start with a survey. I'm talking to startups who do this fairly successfully, and also corporate projects. Start with a survey and understand what's top of mind, and get a sense of how people would behave in the real world. And then conduct small experiments. You could do this, for example, with placing ads in the online channels, and get a feeling what your conversion funnel would look like. That's a good way also to build your mailing list, right? Or to do some lead scoring, or build your so-called remarketing audiences. Very important. For early adopters, I think it's, as we saw from the simulation, it's important to win early adopters. And there's this old saying which says nothing draws a crowd more than a crowd. And indeed, the more people you have using your product and being happy, the more the word of mouth is spreading, of course. So the question is how you can win them. And of course, you need to understand who is your audience, and have a very strong benefits proposition. Yeah. But for example, for those companies who are just starting, you could offer a free assessment, a consultation, or suggest a free of charge experiment that the customers could use, or host customer roundtable. And that way you can get first traction with your early adopters and win the first adopters. Talking about traction, many projects find themselves in the so-called chicken and egg situation. So you have lack of resources, can't build a product. If you don't have a product, you can't win a customer. If you don't have a customer, then you're back on square zero, because the investors really would like for you to bring the first customer. So one thing that you could, for example, do is go to your customer and, for example, in the course of a consulting or let's say an advisory session, you could offer to do a value calculation for a B2B customer, for example. And what that means is you take a look at their products and the processes, and you figure out what the impact would be if they would use your product. And then you offer it as a free experiment to persuade them and convince them that this would be a good contribution to their bottom line. Yeah. My recommendation is here to work in a step-by-step approach. So first to identify the drivers of the value and the adoption, and then design short sprint projects to address the challenges. Retention, key topic. I think the best recommendation I can give is to start focusing on retention first, right from the get-go, and make sure that you are not entering into a scenario with high churn. It will pay off long time. And also consider the benefits in terms of your financial dynamics. If you're holding customers and retaining customers for a longer time, you have to spend less on winning new customers. Your lifetime value per customer is going up. Your recurring revenue is going up. So this will unleash a whole slew of interesting dynamics and favorable dynamics for your business model. But also what you can do, and that's a key thing that I would recommend, is to do surveys early enough to understand and get a read on the retention or probability of the loss here. And make sure you understand what the reasons are for lost customer surveys. And how you put such a survey together in a professional way could be an interesting topic for a next webinar. All right, and that was it for the content part for today. I would like to open for a Q&A for those who would like to ask a few live questions here. And again, feel free to reach out between the sessions. And let me see what we have coming in here from the participants. Yes. So one question here was, what's the tool that you're using for this? I always get this question. Believe me, it's not so much about the tool. The tool that I use, or pretty much most system dynamicists use, is called Vensim. So I use that a lot for, let's say, building simulation models, which are built on the system dynamics. But the point here is that you would need to familiarize yourself with the act of modeling, of course, and how to do it. Right now I'm not teaching a modeling class. If there's interest, I'd be happy to do it. But there are other great resources out there that you can Google. And if somebody's interested, I'd be happy to post a list on the Facebook channel or the YouTube channel. So just let me know. The reason why I like to use this is it gives you a better sense, and it advances our mindset in terms of thinking, in terms of systems, and it enables us to fast forward into the future without having to spend money. So that's why I'm a big fan of system dynamics, and I use this a lot during my work with clients and building businesses and transformation projects. Okay. Yes. So the question here was, in the example that you showed, there was no market growth. What would change if you do a market growth here? Not going into too much detail. I think it's an interesting topic. What you will find interesting is, even when you factor in a certain growth in the market, you might still see a decline of your customer base. And it really depends on all the flows, the inflows and outflows that you have in your customer base, of course. So that's why I say it's very important when you take a real case example that you really understand what your addressable market is, and also what your market growth rate might be, or how you can, let's say, access a market. Now, if you, for example, decide to go into another geographical market, that would be a step function. Let's say you have a product and you localize it for, let's say you have an English language product, you localize it for the Spanish-speaking markets, and suddenly you have a huge jump in your available market. I'd be happy to simulate such an exercise later on, maybe in another webinar. So, great question. Thank you for that. Yeah, here was a question, can we have more of these scenarios? Yes, you can. Just help me understand which ones you are interested in, then I'd be happy to show you some more, or put custom things together that you might be interested in. Here's a question about how to work with the sales force, because it's not all about word of mouth. That is true. Again, this was a simplified case. What we also have to consider, of course, in our business case and into the simulation is hiring people for sales. As you have seen, it's very important to win the first customers, and that's really an important factor in going out and selling. I think you should not expect that the word of mouth is kicking in automatically. There are only few businesses who can pull this off, but really you have to plan in putting the new product or service into the hands of the customers, and that really requires some legwork. So make sure that you factor that in. Again, something we could consider in a future session. Now, word of mouth marketing or digital marketing, of course, is very attractive because it's efficient. It's happening in an accelerated pace. on the other side, you have to also consider that it could be a risk. So if you have a product quality issue, word of mouth can also backfire. In the same way that it's accelerating growth, it can also accelerate decline and churn. Something we haven't shown here in this example, but the model that I showed you can be extended to make that more explicit. And I found that there are more and more businesses who also have to deal with not, let's say, linear churn, so that only a percentage of customers are losing are getting lost each month and are missing, but it's also an accelerating pace because, for example, if a certain cohort is jumping on a new phone technology, new mobile phone, right, this can have a dramatic pull effect on the customer base. So again, keep that in mind. Okay, so yeah, I think that's all good questions. I might not have answered all the questions here. Still some interesting coming in. Again, feel free to join us on the YouTube channel, of course. So subscribe to that so you get the updates. It's free, and also see you hopefully on the web pages and so on. Feel free to contact us if you would like to get an opinion on your project or need help in developing your projects or transformations, and we'd be happy to do that. Okay, so that was the Q&A. Again, please leave a comment, and I want to thank everybody again for the continued interest and the great questions. And I hope to see you soon, either in one of the live sessions or in a future webinar. Thank you very much. Bye-bye.